Wanted to touch as we start this segment on our energy markets. Man, there has been so much interest in what's been going on in the crude oil market and the heating oil market this week. A lot of producers all across the country keeping a close eye on that heating oil trade because that's how they derive their prices for diesel fuel. And so right now today we are seeing a bit of a snapback in the crude oil market after selling off for a couple of weeks. We have January crude oil actually firming up by a little over $1 right now. We're $1.01 higher at 54.44 per barrel. This is on your West Texas Intermediate crude. And if you look at the heating oil trade, how much is it spilling over, pardon the pun, into the heating oil trade? Well, we have December futures about 0.7 of a penny lower there at 198.3 per gallon. This is on the diesel fuel futures, or heating oil as you wish. So a little bit of a divergent trade going on there. Now let's take a look at our grain trade, and to do that, let's go to Chicago, and we have Scott Gecas standing by. And Scott is a regular contributor here on the network. He happens to be with Longleaf Trading. And Scott, always good to visit with you. I imagine it's probably getting kind of thin on attendance there on the floor.
Oh, yeah, definitely thin today. It was pretty much thin all week. Seen a lot of people just leave the floor yesterday around 12 o'clock or so. So it's very light just across the board. Don't expect really too much to happen between now and the close.
Okay, let's take a look at our current trade. We'll start with the corn market in Chicago. And in the corn trade, not a lot going on early this morning. Right now, we're just one tick higher, 1/4 cent higher on December at 361 3/4, make it a half higher now. And if we look at March, we're just up 1/4 cent at 372 1/2. Meanwhile, soybean trade, the soybeans have really been jumping around here the past couple of trading sessions. Right now, January firming up about 3 1/4 cents. We're at 884 1/4, and now we're just one tick from the high of the day. March up 3 1/2 at 898. It's kind of knocking on the door of $9 once again. It's currently on the high of the day as we look at it here. The wheat trade, well, we have Chicago on December down 1/2 cent at $5 1/4. As I mentioned earlier, it keeps playing tag with this $5 mark. July down 2, though. And in Kansas City wheat, we have the December contract now down 1.5 pennies at 471 1/2. July down 2 1/4. So a weaker tone here in the wheat market. Soybeans firming up, corn kind of flat. It's kind of reminiscent of what happened yesterday, Scott.
Yeah, definitely. Yesterday you seen a big spike in the soybeans. Wheat was really waffling back and forth, just like you said, around the $5 mark. The one thing I want to point out is, we have this trade war headlines, and it's always going to be there until anything gets done. Expect something to get done, hopefully, around the G20 meeting. But one thing that has to be noted is, with the new Brazilian crop, they're adding more supply. So, I mean, there's definitely demand. China already came out a few weeks ago and said they're going to do everything in their power just to stay away from U.S. soybeans. So with this new Brazilian crop coming into play, that harvest is going to be roughly around within the first couple of weeks of January. They have ample supply. They can stay away from the U.S. soybeans, even if something gets done. So that's definitely something that we're keeping an eye on. Either way, all the exports coming into play are definitely going to be the key aspect of any type of direction, one way or the other.
Well, with everything else going on, it's interesting to note in the cotton market today. Wanted to point that out, and we can take a look at our cotton futures as they stand right now. On the December contract, it is up about 22 points right now at 75.49, so that could be a factor as well in these trade negotiations between the U.S. and China. All right, Scott, we'll bring you back here in just a moment, and we will take a look at what's going on in the livestock markets ahead of today's USDA reports. We'll take a look when we come back. We're talking with Scott Gecas right now, and he is with Longleaf Trading. He's at the edge of the trading floor in Chicago, and we've talked about it earlier this morning. In a little over an hour from right now, Scott, trade looking forward to the release of the November edition of the Cattle on Feed report and our cold storage report. We have the Wall Street Journal published a survey of estimates of the trade for the cattle on feed numbers, and here's what they came up with. When they put all the numbers together, they had an on-feed number of 4.3% increase over a year ago at this time. Placements they expect to be about 1.2% under what we had last year at this time. And the marketing's number is expected to be about a 4.2% increase over last year. Now, you have to keep in mind that placements number a year ago was just a very high, very solid number. To compare this against that, it's almost unfair in a way, isn't it? Because it almost has to be less than what it had a year ago.
Yeah, you would think. The estimates that we were looking at is around 3.8, with 4.4 being on the high end. So we're going to see how that really is going to come into play. I mean, we're running across the whole protein complex. There's still short-term supply concerns. Hopefully the market can start to absorb it. The one thing that with the cattle market, going into the holiday season, you're going to see a lot of the Christmas parties, a lot of steak dinners and stuff like that. So they expect that short-term supply to be absorbed by some of that demand between now and the end of the year. So we're going to see how that actually plays out versus what they're really expecting. You know, that strong U.S. dollar is definitely hurting the exports, but they're also expecting the exports to be much stronger than they have been in 2019 rather than 2018. So we're going to see how that plays.
On the futures trade, we'll begin with the live cattle market and get everyone updated here on current trades. So in Chicago, right behind you, we have the December contract now 30 cents higher. We're at 116 even per hundredweight. Kind of a quiet trading range today, too. Only about a $0.50 wide. We have the February contract on the live cattle up 33 cents now at 120.05 per hundredweight. Both of those about right in the middle of our trading range. Now on the feeder cattle, we'll start with January. We are up 78 cents right now at 147.65. And that's within a dime of its high of the day. March up 57 now at 144.72. So that's how they're getting positioned heading into the report. Meanwhile, on the lean hogs, well, we have December down 27 at 58.70, and we have February down 65 at 66.47. When you look at a lean hog chart, Scott, what do you see when you look at it?
Yeah, in a lean hog chart, just in general, the last 14 days, you've been in a very tight range. So we're going to see how this is going to play out. Keep in mind the African swine fever in China is still playing a huge part in this. You can see that it is being priced in for a stronger demand in the deferred contracts. We expect something to come out of that. One thing that needs to be noted is usually after the reports that came out November 8th for the imports of pork to China, they usually give them out within a few days, maybe 3 days after the report. Even now, with as far as we are into the month, they still have not released that. So that's very important because everyone was expecting, as we said, 10%. If it affects 10% of the herd, it's going to be equivalent to all the world's traded pork. Now, that's clearly, very clearly, that it's not controlled. They actually came out earlier last night and said that they're implementing new things to curb the African swine fever.
That's a great topic, and we may have to pick up on that next time we talk here. Unfortunately, we're running out of time here, but Scott, thanks for bringing that up. Something to consider. Scott Gecas, he is with Longleaf Trading in Chicago. So